think that, look, every major run-up in Bitcoin, there's been about an 80% correction. Now, that would make a lot of sense in a lot of ways, because that would bring us back into the neighborhood of 15,000, which, interestingly enough, when we started investing in Bitcoin, it was at 10,000. And I thought that it had good value there, because our research shows that, as a store of value, and that's a debatable point, that if you were to comp it against gold, you'd be at somewhere between $400,000 and $600,000. So 10,000 looked pretty cheap. By the time we got the investment done, it was at 20,000. And then we've had this massive run up and an exponential run up, and those kinds of moves aren't sustainable. And so the pullback in Bitcoin is very interesting, because it's come in the wake of a lot of central bank liquidity. And what we're starting to see is central bank liquidity is beginning to fade. And as the liquidity is fading, Bitcoin's falling. And so I don't think we're done with the fade in liquidity. And a lot of people don't really understand why that's happening.
What looks like bottom to you for Bitcoin at a price level?
Well, I mean, I've been saying basically between 20 and 30,000. The real bottom, when you look at the technicals, 10,000 would be the real bottom. That's probably a little extreme, so I would say 15. And certainly I wouldn't be if it got to 20,000, I wouldn't be in a hurry to buy it, because when markets like this wash out, it usually takes a couple of years of consolidation. So I don't think people need to be anxious to be putting money into Bitcoin right now.
Okay, but long term, you're very bullish. I mean, at one point talking about hundreds of thousands of dollars, right? So walk me through that case. I mean, what does it take to get from here, or lower, let's say 15,000, to that $600,000 level?
Well, the thing I pointed to is the flows of institutional money. And I was just watching TV before I came in today for the interview. It was about sovereign wealth funds and cryptocurrency, and that sovereign wealth funds don't find cryptocurrency to have matured enough to become an asset class. So without large flows of capital coming from the institutional sector, it remains a highly volatile, speculative asset, and the volatility, scares institutional money away, and so retail, is willing to speculate, and is often caught up in mania, and this certainly got into a mania, and so once they've exhausted all of their savings, there's no one else left to buy.